Ethereum has been a cornerstone of the crypto world for nearly a decade. But with new blockchains, changing regulations, and market volatility in 2025, many investors are asking, is ETH still worth holding or buying today? We'll break down Ethereum's evolution post-merge, its staking rewards, deflationary supply, rising competition, and long-term potential. If you're considering adding ETH to your portfolio or wondering if you should keep what you have, this is the full picture you need before making your next move. Today we will talk about, is Ethereum still a good investment? Deep Dive 2025. So before we start, make sure to hit the like button and subscribe to my channel. Ethereum has been a foundational pillar of the cryptocurrency ecosystem since its launch in 2015. As the first blockchain to introduce smart contracts, it created the blueprint for everything from decentralized finance, DeFi, and non-fungible tokens, NFTs, to decentralized autonomous organizations, DAOs, and tokenized real-world assets. For years, investors hailed ETH not just as a cryptocurrency, but as the fuel for a global decentralized economy. However, as we enter the second half of 2025, the landscape has shifted dramatically. With growing competition, regulatory uncertainty, shifting macroeconomic conditions, and Ethereum's own technological evolution, the question arises, is Ethereum still a good investment in 2025? This article will explore Ethereum from every angle: its technological progress, market position, risks, use cases, tokenomics, staking dynamics, and future outlook. Whether you're a retail investor, a crypto newbie, or an institutional player, understanding the current state of Ethereum is essential to making informed decisions. Let's break it all down. Ethereum 2.0 and the shift to proof-of-stake. Ethereum's long-awaited transition from proof-of-work (POW) to proof-of-stake (POS), known as the merge, was successfully completed in 2022. By 2025, Ethereum has been running as a POS blockchain for nearly 3 years. This move was more than just an energy efficiency upgrade, reducing power usage by over 99.5%. It fundamentally changed how ETH functions and how investors interact with the ecosystem. Under POS, anyone with at least 32 ETH can stake their tokens and help validate transactions, earning rewards in return. As of 2025, over 27 million ETH is staked, more than 22% of the total supply, reducing the circulating supply and increasing scarcity. Key investor benefits. Staking rewards. ETH holders can earn 3 to 5% APY through staking, turning ETH into a yield-generating asset. Deflationary pressure. Since the implementation of EIP 1559 in 2021, a portion of ETH is burned with every transaction. Combined with high network activity, ETH has become a net deflationary asset in certain periods. Network security. The POS model has proven robust, resisting major attacks and centralization concerns so far. So ETH is no longer just an asset you hold, it's an asset you can grow. But that's just one piece of the puzzle. Ethereum's market dominance in 2025. In 2025, Ethereum remains the leading Layer 1 smart contract platform, commanding roughly 55 to 60% of total value locked (TVL) across DeFi platforms. Projects like Uniswap, Aave, Lido, and MakerDAO continue to dominate the decentralized finance space, with Ethereum as their home base. However, it's no longer alone at the top. Rising competitors. Solana, Sol, with extremely low fees and high throughput. Solana has grown its ecosystem rapidly, especially in consumer apps and real-time games. Avalanche, AVAX, known for subnets and enterprise use cases. Sui and Aptos, built using Move language, promising fast, parallel execution. Layer 2s, Arbitrum, Optimism Base, built on Ethereum but compete for users and liquidity. Despite competition, Ethereum's core strengths, network effects, decentralization, developer mindshare, and composability have helped it remain the dominant hub for smart contract innovation. Most other Layer 1s are compared to Ethereum, not the other way around. And most major DeFi and NFT projects still launch on Ethereum first. Layer 2 ecosystem and scalability. One of Ethereum's most transformative evolutions in 2025 is the maturation of its Layer 2 ecosystem. Layer 2, L2, solutions are scaling tools that sit on top of Ethereum. processing transactions more efficiently and cheaply while still relying on Ethereum's main chain for security. Top Layer 2 networks in 2025 include Arbitrum, Optimism Base by Coinbase, Sync, Starknet. These networks collectively process more daily transactions than Ethereum L1 itself. Ethereum's rollup-centric roadmap aims to make L2s the default environment for most user activity, with L1 acting as a settlement layer. This architecture has dramatically reduced gas fees for users while keeping Ethereum scalable and decentralized. For investors, this means Ethereum is no longer bottlenecked by transaction speed. Its scaling solution is modular, one that integrates innovation while preserving security. As L2s grow, so does Ethereum's value proposition as the foundational layer beneath them. Use cases expanding beyond DeFi and NFTs. Ethereum's early reputation as the DeFi and NFT blockchain has grown to encompass much more in 2025. Today, Ethereum supports use cases such as tokenized real-world assets, RWAs like bonds, real estate, and commodities, stablecoins and CBDCs. Tether, USDT, and USDC remain heavily used on Ethereum. Gaming and metaverse integrations, on-chain identity and reputation systems, decentralized AI agents and compute platforms, enterprise and institutional finance integrations via Base, Polygon, and others. Governments and corporations are exploring Ethereum-compatible networks for regulated finance, RegFi, while startups continue to launch novel apps in privacy, social networks, and creator economies. The utility of Ethereum is no longer theoretical. It's embedded in thousands of live, working applications used by millions of people. Tokenomics and ETH supply. One of Ethereum's strongest investment cases in 2025 lies in its evolving tokenomics. Pre-merge, ETH had an annual inflation rate of 4.5%. Today, due to the combination of EIP 1559, fee burning, and POA staking, ETH has become deflationary during high network activity. Some days see thousands of ETH burned, permanently reducing supply. Key tokenomic stats as of mid-2025. Total supply, 117 million ETH. ETH state, 27 million ETH. Annual issuance, 0.6% versus 4.5% pre-merge. Annual burn, variable, but frequently exceeds issuance. This scarcity dynamic has turned ETH into a digital commodity with yield, a blend between digital gold and decentralized tech stock. Risks and challenges. No investment is without risk, and Ethereum has its share. Some of the key concerns in 2025 include scalability and congestion. Despite L2s, Ethereum L1 can still get congested, causing delays and higher fees. Developers must continue optimizing both the protocol and rollups. Regulatory uncertainty. The SEC and other global regulators continue to scrutinize Ethereum's staking model and its status as a potential security. A future ruling could affect staking yields or institutional participation. Centralization risks. Large staking pools and L2 operators, like Coinbase, Lido, and EigenLayer, concentrate power. Critics argue this could undermine Ethereum's decentralization long-term. Competition. While Ethereum has first-mover advantage, newer chains with better UX and lower fees threaten to siphon users and developers away. Complex user experience. Even in 2025, crypto remains too complex for mainstream users. Wallets, gas fees, and bridging still intimidate new investors, slowing adoption. Institutional and long-term outlook. Ethereum is increasingly seen as a core crypto asset for institutions, right alongside Bitcoin. With the launch of Ethereum ETS in multiple jurisdictions, following Bitcoin's lead, ETH is gaining credibility as a long-term investment vehicle. Large financial players like BlackRock, Fidelity, and JP Morgan are exploring Ethereum-based solutions for asset tokenization, while ETH remains a top choice for portfolio diversification. ETH's staking yield, deflationary nature, and exposure to Web3 innovation make it appealing for pension funds and hedge funds alike. If Ethereum continues executing its roadmap, which includes proposer-builder separation, PBS, statelessness, and improved decentralization, it could solidify its position as the global base layer of the Internet of Value. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to